Okay, I really hope.
This is a channel for you.
So I really hope you guys can see this. So I'm gonna start with this intro today.
Like, trust me, this is. So if you're out there and you want to see what
It's
forex
a very
trading
short
really
intro.
looks like, this is the channel for you. Like, trust me, this is the channel for you.
Today I'm
This
gonna be
channel
putting my
is
mind
the
in
raw
some
documentation
topics,
of
and I'm sure you
actual progress and regressions that a person who is into forex seriously and also has a 9 to 5 job is like. This is literally the whole shebang. There is no hiding anything, there is no pretending, there is no extra editing, there's no fini family. It's just seeing the real raw experience. Seeing your trades go straight into profit, seeing your trade go into profit and then go back to entry and stop loss, seeing your trades go straight into stop loss. That is what this channel is all about.
so
So if you're out
for those of you who are new to the channel, well, hit the subscribe button, join the moving train. We're about to analyze the markets in a manner that is quite different. We do this every day. We did this for the past 2 days. We've been doing it, and we're going to continue doing this as many times as possible every day. It was supposed to be 7:30, but I don't want to spend like short time and all that stuff. So I just want to do a quick analysis and show everybody what we think the market is going to be doing today. So without further ado, let's dive into it. So yesterday I saw something that actually pissed me off, right? Last night, right? Last night, this trade, which we all knew, I talked about this trade, really, really looked at this trade, expected a lot from this trade, right? This trade right here, the one with the loss. I expected a lot from this trade, but guess what? It went out in the loss. And guess what? The funny thing is, I realized something quickly yesterday. Is that the broker you use, sometimes they are very, very annoying. So imagine, I want you guys to look at this right now, right? So I had a trade here, around here. Oh, sorry, it was a short trade. I had a trade around here, aiming for, I think, these lows or so. Aiming for these lows or so. But guess what happened when the market opened? You won't believe what happened. My broker started the market with a 38 pip spread, like literally roughly 38 pips spread. It was crazy. I was like, what the hell is this? Like I said this last night, I would drop the video. I would definitely drop the video. I recorded the whole situation. I'll drop the video. You guys are gonna see it. And they just stopped me out for no reason. And the trade actually went into profit. You can see it went down as predicted, and it's a profitable trade. But guess what? I got stopped out because my broker decided that they wanted to steal money off the table for the beginning of the market, right? So they had to cut off as many trades as possible. And that's what though happens. Though it's not just my broker, it's something that happens like all over. But the amount of spread, that's crazy. That's really, really crazy. So today we're focusing on people who want to trade very short term, right? Very, very short term traders. Now, as a very short term trader, my best advice for you is to look for a clear volatile market. That's a market where there is moves. And you can do that by going to this website called marketmilk.babypips.com. I really hope you guys are hearing my audio. Yeah, okay, so the audio is clear. So marketmilk.babypips.com, and you can look at the screenshot of the market currently, like the way the market is moving. If you look at this over time, you will notice these bars are moving in, some coming down, some going up as price moves. You can reduce the time frame here. See, okay, the 5 minutes. I think it's somewhere in the 1 minute you can see it move very fast. Yeah, so the 1 minute, you see, it's constantly moving as the market moves. Every 1 minute it refreshes as the market moves. You see that? It refreshes. So, but you can't use this strength meter and the rest for like 1 minute view. You're going to get chopped up, that's for sure. So what you use this for is actually your higher time frame. For example, let's say you want to start from the daily. You're going to use this from the daily time frame. Now, the daily time frame tells you, okay, on the daily, Japanese yen, right, seems to be like the best performing thing currently on just the daily time frame. The moment you switch that time frame, you're going to see more. But what are we looking for here? There's a lot of things here you can utilize, but for me, this is what I want to personally utilize. So on the daily, I want to use the volatility calculator. So volatility more like the rate at which market moves, how high it's moving, like how fast it's moving. So I'm using the volatility meter in real time, and I'm seeing that the Japanese yen pairs have the best move, like they are highly volatile right now, followed by the New Zealand dollar pairs. Obviously, it's morning over here in Nigeria, GMT+1. It's morning, and at this period in time, the current session is the New Zealand, is the what do they call it again? I think it's the Aussie session or so, but it's the US, the New Zealand dollar and the Australian dollar. They are most volatile during this session. The next session we're gonna have is the London session. I think that's Sydney session, yeah. Then the Japanese session, Sydney session, the Asian session, the Sydney session. So Sydney session, New Zealand, Australian dollar. 7 o'clock, we're currently in the London version, the London session. So we expect to start seeing crazy moves in the British pound. Currently, the British pound still seems like the weakest thing, but it's 7 o'clock, past seven, and we know what's gonna happen when the pound starts to run. So in that light, you already know what to expect. You can also do this quickly by going to, let's say, trading view, right? Go to trading view. You need to be on the lower time frame below the daily, right? You need to be on the lower time frame. Let's just take the 1 hour. We're going to put in a random indicator that has to do with sessions, so FS market sessions, right? Let's just use that. So you can see Tokyo session just finished. Okay, yeah, Tokyo, that's what it's called, Tokyo session. There's a fourth session that isn't displayed here. I wanted to display all of them. So you can see London, New York, Sydney session. Yeah. Okay, so we're done with Sydney session. We're now in the London session. We're now in the London session. London session is going to start. This is 4 p.m. This is 4 o'clock. Man, this thing is wrong. Oh, okay, okay. I didn't say it properly. Yeah, right there. So the London session is going to start exactly in the next 1 hour, 30 minutes. We're currently in the Tokyo session, and in Tokyo session, we see the Japanese and then the Australian dollar, the New Zealand dollar move. Now, why am I teaching you guys all of this? Well, why we are looking for people who trade the lower time frame, that is the scalpers, and sometimes the swing traders, sometimes they need to understand that this is the session the market is currently in when they want to take a trade and understand, okay, what push did we find in this session? We all know the London session and the New York session are by far the most volatile in the entire market. That's where like major moves usually start from. If you just scroll down, you see this one in yellow or brownish yellow. You notice they are just so noticeable. That's when you start to see like strong moves in a certain direction from the market because a lot of people in the US tend to trade, and other people tend to trade during that session. The next best performing session, as you can look right here, you notice is the purple one. This Sydney session. But take note, the London session is also one of the most popular sessions because a lot of traders also love to utilize the London session also. So we have the New York, the London, and the Sydney. In this particular, now the thing is this, there's this nuance to it. In Australian dollar against the US dollar, this is what you see. The New York session and the Sydney session have like the best moves. Why? Take note, the Australian session, if you calculate their time frame, Australian time frame, they fall, their morning times, afternoon times fall within the Sydney session. So that is when people around there are more into the market. That is when their central bank is in the market. Same thing as in New York. The New York, there's a slight overlap for them. So the New York is in their closing hours. Hence, you see, the New York moves all markets, and then the Sydney session moves its specific market. If I should go to, let's say, the Japanese yen, let's just look for the Japanese yen against the US dollar, you're going to notice similar trend, but this time you're going to notice that you see what I'm saying? The Tokyo session, you're seeing how big the Tokyo session actually is because the Japanese are trading. You see this one right here? think you can see this one right here. I remove the background, remove the line, and then I'll add the colors. So you can see the session right here. Let me zoom into that area. You see how huge this particular Tokyo session is, right? See how huge it is. In fact, it was as big. Let's just do a measurement here. You can see how big it was, and then compare that against the New York session that followed. You see how big it is. So each market depends on the session. Like each market depends on the currency you are trading, the session they usually fall into, and then align it also with the New York session. Now, British pound, since it's morning, we're about to enter into the British pound, the London session, and we'll span into the New York session. So it's best for me personally to be trading the US dollars and the British pound pairs. As if you want to trade like on the lower time frame. So in that light, we can remove a lot of these things here and then recalibrate our focus, right? Recalibrate our focus to things that has to do with the euro, the British pound, and the US dollar. So in that light, you can see you are looking for euro against the USD, the British pound against the US dollar. These two pairs are mostly traded by a lot of Nigerians because this is where they can find like extreme volatility when it comes to this is where they tend to mostly get volatility. Not that it's the only place they can find it. Now, what do I see here in this market? Well, following my strategy, I do not see an opportunity in this market anytime soon. It's going to take like days for this to even be called upon, right? It's going to take like days. Now, I go into the lower time frame 4 hours. I'm not seeing any reason to trade this market. I've been teaching people market structure, and I think you guys already understand market structure. So the only thing I see here is a possible 1 hour trade, but even the 1 hour trade is not so nice because there's this push right here. There's this push right here, and what I want to see is I want to see a good supply zone around here when I break down. Okay, there is a supply zone, but it has been utilized. You can see here, this is the supply zone. Price has utilized it here. Sorry, I need to drop the mic. So price has utilized it right here. I need my two hands, that's why. And also used here. So this is no longer like valid zone. Hence, I kind of expect price to push away from it. So if you want to trade this, you should be looking for reasons to buy. And the reason to buy here is you want to see price either come down here before you dive in, for a buying chance in 15 minutes, right? In 15 minutes. But the price should start breaking above here. Price breaks above here, which likely it's going to be doing. Looking at 1 minute, 5 minutes, there is a zone here for price to delegate with. We're looking at right here. This is one. We're looking at this 1 minute zone. And we're watching how price reacts to both of them. So price is now in a bullish move on this 1 minute structure. How do I know? I'm going to turn this off and put this right here. So taking out this high, coming back for a retest, going up, retesting this, and it looks like it is not respecting. So you can actually look for these markets. You are hoping to buy into this market, right? We're hoping to buy to where now? That's the thing, right? Buy to where? Since we're currently at a very high level, where are we buying to? Where are we actually buying to? Let's see if we can find something for people who want to buy in this market. Well, if you want to buy in this market, your first target is obviously this high. Second target is right here, this high. These are your targets. Look at the 15 minutes, see if there's an opportunity, there's a retest. So you have a clean run to at least this high, basically. Let's do a Fibonacci retracement, review this whole thing. I'm currently in equilibrium. So at equilibrium, in the 5 minutes, I'm going to take, I'm looking at this structure right here, and I want to look at it in 15 minutes. I'm waiting, this is 7 minutes for this price to close above. My price closes above, we have a reason to shoot for it, right? There's no resistance here. There is no resistance here down to the 1 minute. This is the only resistance we're seeing here, this one and this one. So with price closing above here, then you might want to take the trigger and aim for this high. You might want to take that trigger and aim for this high. But then again, on this time frame I'm looking at, this is the 15 minutes, right? In 15 minutes, there's just one issue. There's this lower structure here. So what are we looking at basically? We're looking at price did this, came down, broke above. We're supposed to be pulling downwards for a retest of a lower time frame, for a retest of a supply zone, a demand zone, sorry. But looking at this market, there is no demand zone. Price has touched the demand zone with this candle. Allow me to use this. So with this candle, price has touched the demand zone already. This was supposed to be the demand zone price here, but price already utilized it. So if price has utilized it and price wants to really push up, price is definitely supposed to go above this zone. Price is supposed to go above that zone. Utilize it here and it's pushing upwards. So I see good buying pressure. Good buying pressure. What I see is good buying pressure from here to this zone. That's what I see. It's market. And let's say we just take it, right? We take it. But I just don't want to take it for one reason. Why don't I want to take it for one reason? I want this 15 minutes. It's good. It's printing. It printed a, should I call it? Yeah, it printed a supply zone here in its move. Though the inefficiency is not like too strong, but it is an inefficiency. It's a good zone. There's a zone here. So what I want to see basically is price mitigate this inefficiency. Possibly take this high with this possibly take this supply zone with it, and then retrace here for a retest. And putting the money, we don't want to lose too much, right? We don't want to lose too much. We're going to put this order. First and foremost, we need to watch the market is going to do this. I have less than 10 minutes to do this. I need to be in the office in about 10 minutes time. So this is the trade we're hoping for right here. I'm going to be watching this in the office. This is the trade we're hoping for right here. With my stop loss way below, just to withhold, and I'm aiming for the high. Though there seems to be no 15 minutes blockage here for me. There are no 15 minutes blocks for me here from what I see, especially after price broke after above this high in the structural review. So what is the market structure here basically? I know a lot of people are wondering, we didn't draw the market structure, all of that stuff. This is a low to this high. This is a low. All of this is noise right now. This is a high. This is a low. So I'm expecting what? A high. That's what I'm expecting in this market. I could also trade it all the way to this high. That's about 5 times profit. So what we're looking at is, again, what am I looking at? Again, I'm hoping for price to return here after it's mitigated. It has mitigated. So now I can set this order, waiting for it to return joyfully to here. If it starts to return, then I'll be fielding. If it doesn't return, it's going to run all the way up, and should have. But until then, so this is my look at the euro US dollar. it's a quick review, quick view, and all that stuff. But nevertheless, it is just okay for the Euro US dollar. Let's see, do I have any chat? Nobody in the chat room. All right. So I'll say thank you again for watching, and again, do well to hit the subscribe button, join the channel, follow the trends, and let's see how the market goes, and let's go with it too. Peace.